I know that there's a lot of anticipation for 2023, a lot of questions going on in your mind. Will my mortgage interest rates go up again? Will the Bank of England base rate go up again? Well, without any further ado, let's dive right into the video Vidara.
Hi, I'm Vidara.
Hi, this is Sunet.
Hello, I'm Rishika. And I'm Pradeep.
What's up everyone, we are back from recess. So cut into the chase, let me invite Sunet.
Hi, Vidara. Pleasure to be here.
Definitely, pleasure to be here too. So Sunet, what is a recess and what happens in a recess?
Wow, you're asking me such a gloomy topic to talk on when I'm in such a beautiful environment.
Definitely.
But, a recession is basically a prolonged period of economic downturn. Technically speaking, if we have 2 quarters of negative GDP growth, that constitutes a recession.
Definitely.
Now, historically, a recession will have high rates of unemployment, manufacturing very slow, the retail markets not really moving. Basically, consumers are not spending, right? And what that forces central banks to do around the world is to adjust interest rates lower, so that gives a spark to the economy, that boosts the economy and people start spending again.
Yeah.
But given where inflation is right now, the Bank of England main priority now is to sort of cool that down. So rather than lowering rates, they are increasing interest rates. Now, what that means to the mortgage market, well, basically, it's a period where house prices are falling, as we know, right? And it's whether that's a good opportunity to buy, I would say yes. Obviously, that depends on personal circumstances,
yes,
but if you have a strong deposit, some emergency funds, and you find the right house and it's obviously discounted because markets are falling, I think it's a great time to buy. Obviously, the forecast for inflation is to come down. So in the short term, individuals who are buying may have to pay higher rates of interest, but that will eventually stabilize. But you end up with a house that you bought cheaply. So in this doom and gloom, I think there's opportunity.
Definitely. Hi FC, how are you?
Hi, I'm very well, thank you. How are you with that?
I'm really good. I hope Sri Lanka is treating you nice.
Oh, Sri Lanka is always good hosts. They make sure that you looked after very well.
Yeah,
definitely enjoyed.
Okay, so jumping into the question. So there's a rumor that the Bank of England base rate can go up to 4%. So will it actually go up? So if it does, what would actually happen?
Well, I've heard rumors that it can even go up to 7%, right?
Oh.
That's just rumors. We don't know, whether it's true. The main thing Bank of England currently they are looking at is the inflation. So it's all inflation driven because in UK the inflation is a massive problem at the moment. It's hovering around 10%. So they want to get this down as possible.
Yeah.
And one of the mechanisms they are using is the interest rate. So if they can control the Bank of England base rate, they are very likely to curb interest, the inflation rates as well.
Yeah.
So that's why they are targeting that. So yes, the governor has said that he may increase rate as and when he feels fit. So the Monetary Policy Committee will take this into account. So they are the ones who actually make the final decision on this one.
Yeah.
But yes, who knows, it might go up to 4%. But in 2023, I like to look at it with a lot of optimism, like I'm looking at the ocean out here with a lot of optimism. I'm hoping it won't be that because we as individuals are not used to paying 4%, 5% interest rates.
Yeah.
So we'd like to see that come down a little bit. So I'm quite optimistic. It won't be as bad as it sounds, but it's down to various other factors we don't have control over.
Yeah, definitely. So if Steve, we saw the Bank of England base rate going up to 3% in 2022. So when the rates went up, the lenders seemed to reduce their interest rates. Will this trend continue in 2023 as well?
Fingers crossed, I hope so. That'll be good news for the borrowers for sure. Obviously, the interest rates has gone up from a money market point of view. That's what has triggered interest rates going up for the mortgages as well.
Yeah.
But both are connected in many ways, but it's not 100% linked.
Yeah.
So that's why you see. So Bank of England's main objectives at the moment is to sort of curb inflation. So therefore, we may see rate rises in future as well, because they are trying to curb inflation, which is at 10%. But whereas with the money markets, the way it operates is slightly different. They do take this into account,
Yeah.
but they also look at demand and supply and various other factors around, right? So those other factors play a big part. The war in Ukraine, for example, and the energy problems. All of those have had impact on that, and also the sterling pound has been weak at certain points.
Yeah.
So that has had an impact. So with the interest rate rising, it rose because of this reason. First, to start off with, because of the energy crisis, and then the pound being weak, and various other factors. But then there were some government policies that came into play as well, which kind of really triggered the interest rate to be high in the UK.
Yeah.
So money markets became a little uneasy about the UK economy. But I can see that reversing. But it hasn't reversed to the extent that it was before. So therefore, you never know, right? There are a lot of factors that come into play. But in theory, if it's reversing, we might see interest rate come down further. But it's something we don't know. But that's not the Bank of England base rate, but that's the interest rate that people will borrow money on. So I like to look at 2023 with a lot of optimism.
Definitely. Let's talk about buy-to-let investors. So this year particularly has been really hard for them, given that the stress test rates increased. So if you haven't watched how the stress test actually work, click right here. So how does it look like for buy-to-let investors in 2023? Will the trend continue, or will they have a shed of light?
Well, you're right in saying that 2022, particularly the latter part of 2022, has been a very difficult time for buy-to-let investors trying to get a new mortgage, because the interest rates, one, is quite high. Some people are okay with it, but that's not been the only problem. Like you said, the stress test has been a bigger problem, because even though they borrow at say 5-6%, the bank stress tests you at 7%, 7.5%, and one bank, a big bank, even at 8.5%, right? Which makes buy-to-let affordability very, very difficult.
Yeah.
So it has been a problem in 2022. We'll hope that it will reverse off, because as you mentioned before, the interest rates, the banks have slowly started cutting down interest rates because the money markets have eased a little bit. So let's hope in 2023, because the interest rates have sort of slowly started to come down, that will ease off and go away, right?
Yeah.
So I'm hoping to see, I'm again being very optimistic here, I'm hoping to see that there'll be some reversals taking place in the buy-to-let side as well, and buy-to-let becomes a little bit more affordable, because otherwise it might create problems, because new people might not want to buy property. And existing landlords may struggle to get a mortgage, so that might be a problem. Capital raising with buy-to-lets are almost impossible at the moment, because the stress rates are so difficult that people really struggle to make things work.
Yeah.
But I'm being optimistic. Hopefully with the money market settling and the interest rates settling slowly, the banks will take a little bit more easy approach when it comes to this thing.
Yeah.
And hopefully we'll see something good happen.
Here's Sured, the man who appears out of the blue. So I have a question for both of you. So Russia's decision has affected economies all around the world, right? So what happens in the future, that is in 2023? What is the mortgage point of view and what is the wealth point of view?
Well, it's a difficult question to answer, because we don't know where the war is going, but as there are a lot of geopolitics in play here, Russia may not agree on a deal, obviously, if it's not favorable to them. Ukraine will not agree if it's not favorable to them and the West.
Yeah.
But of course, if Ukraine comes out with a good deal, which was before the war, a deal better than when it was before the war, that would be good for the global economy. When speaking about UK, now, we have always been dependent on Russia for energy.
Yeah.
Now, after the war, I don't think that situation is going to change much, where even though the UK is thinking of moving away from Russia, we may still be dependent on Russian supplies.
Yeah.
And even though we are looking at other sources of energy, what we feel may happen is that energy prices may stay high as they are now, or
Yeah.
may stabilize a little more, but we may not see the prices going down as what it was before the war.
Yeah.
And in terms of interest rates, hopefully, with the zero COVID policy from China coming to an end, there's some sort of light at the end of the tunnel with Brexit, and hopefully with the end of the war, we may see prices globally stabilizing as well,
Yeah.
which may mean that interest rates will come down as inflation comes down.
Yeah.
But I think we should be resigned to the fact that interest rates will never be as low as what it was before.
Yeah.
And we expect it to be around maybe 3%, maybe slightly lower, but
Yeah.
we would not see the interest rates that were there before. I think that's the sort of take on the UK market. With mortgages, of course, I'll leave it to the boss.
So Steve, what's the mortgage point of
I
view?
think Suren did cover part of it anyway. From a humanitarian point of view, we'll all hope for the war to finish and
Yeah.
no more casualties, right, from a humanitarian point of view. So that's something that we all look forward to. But from an interest point of view, actually this crisis is the one that actually started triggering this.
Yeah.
So hopefully if things ease, whichever side wins or whatever compromise they come to, we'll hope that the market will ease a little bit and that will make things easier for the borrowers.
Yeah.
So that's something that we'll all hope for. So again, 2023, I'm looking at it with a lot of optimism.
Yeah.
So hopefully we can find some kind of resolution there and things will ease for a lot of people. And cost of living will come down, inflation comes down, and hopefully the next one is the interest rates, right, to
Yeah.
follow. So hopefully all of that will fall in line then. So let's hope for the best for 2023.
Definitely. So guys, you just watched WIS Mortgages, Accounting and Insurance. I hope you all liked this video, and if you did, click on the like button, subscribe to our YouTube channel and click on the notification bell. So until then, adios.